I'd like to thank everyone for joining this webinar today, Fighting Slow Payment in Construction, Cash Management, and Risk Mitigation. If you go to the next slide, I'm going to go and introduce some of the agenda today and our presenters on the call. So we're going to be talking about a really good topic, especially for right now. I'm going to go through the introductions of everyone here in a second, but just to go through the agenda, we're going to be talking about construction payments and how to allocate funds in construction, some of the challenges around getting paid in construction, and then we're going to have some time, about 15 minutes at the end after the 30 minutes for the presentation, for those in the audience to ask some questions and answers. So you can type in and chat some questions throughout, and if they're relevant to what we're talking about, I may stop and answer some of your questions. So please feel free to send in your questions using the chat feature below. So without further ado, I'd like to introduce our hosts at FK Construction Funding. We have Frank Skelly and Scott Bergener, and they have a really fun topic here. So I'd like to kick it over to them. Thanks guys for hosting, and again, thanks for everyone for attending the session today.
Yep, thanks Michael. Next slide, Pierce, if you could. So as Michael said, I'm Scott Bergener, the Director of Project Controls here at FK Construction Funding. We are a cash management, funds control, risk mitigation company funding commercial construction projects for really anybody involved, top to bottom of the project. We have a solution, risk solution for either owner, GC, banks, lenders, subcontractors, kind of put all the pieces together. With me here, I have the Managing Director, Frank Skelly. Frank?
Yep. Hey, Scott. Thank you, Michael. Yeah, we've tried to, come up with a solution that we believe addresses. We believe this is a multifaceted problem in the industry that we've tried to address over the last 10 years. So, Michael, did you want to introduce Levelset?
Yeah, thanks. So for those of you who aren't familiar with Levelset, quite simply, Levelset is here to help you get paid. We remove a lot of the stress for managing payments in construction, which Scott and Frank are going to really speak to some of those challenges here in a second. But Levelset has a lot of free resources, an expert center where you can ask questions to construction payment experts like the guys here on the call for free, contractor profiles, free resources, and a lot of things. So visit levelset.com to learn more about Levelset if you're not already familiar.
Okay, so as I mentioned a minute ago, we believe that this is a multifaceted issue. Certainly cash flow is the elephant in the room. That's the sort of issue that everybody's familiar with when they think of trouble getting paid or paying their suppliers, or it's the cash flow issues that are sort of infamous in the commercial construction industry. But we believe that the reason that there has not been a solution put forth, in this trillion-dollar industry, is because there are a couple of facets that we believe have to be addressed, and we believe that they all have to be addressed together. Certainly, as I said, cash flow is the one that's maybe the biggest one, or the most significant one. Is the one that everybody's familiar with. But there's also allocation of funds, right, or funds control. We believe that that's a key component as well, right? You've got a billing process in the commercial construction industry that's monthly. You combine that with paid when paid, retainage, and 60 days plus or minus to get paid. You then have a transparency issue, right? You've got risk and liability that is every owner's concerned, every general contractor's concerned about that, and you've also got the risk of project delays, right? So particularly the owners and of course the general contractors are concerned about that. Delays kill profits, and they often destroy relationships, sadly. So we believe that there's a need to solve the cash flow problem in conjunction with the allocation of funds. in other words, making sure that everybody on the project is paid and that there's complete transparency. We also believe that there needs to be a monitoring component to ensure compliance, right? To make sure that the right documents are getting to the right people, licenses are intact, insurance is in place, workers' comp is in place, etc. And of course, the main issue on everybody's mind at the end of the day is really risk mitigation, right? That's everybody's goal, especially now in these trying times with COVID and this, the madness that we've all seen around the country over the last week. It's particularly important that that people address the risk mitigation issue, right? Lenders are pulling out of projects. Lenders are pulling the rug out from under general contractors, and of course, suppliers and subs are more concerned than ever that if they proceed or they move forward, that they're going to get paid, or that the project isn't going to be shelved sort of halfway through it. So again, we believe a solution needs to address all parties. The owners, the lenders, the general contractors, and the subs and suppliers equally. If we address the cash flow issue, the funds control issue, the monitoring, compliance, and risk mitigation, we believe that's the key to project success. And as a result, project success is also going to come from everybody being paid, making sure that everybody gets what they're supposed to get. And of course, Levelset plays a large role in that part of the solution. So, this risk mitigation is everybody's business, and I think, I believe we've come up with we've tried to address all the components that we believe are necessary to have a successful project. And I guess at this point we can, I don't know if you have anything to add, Scott, or we can start going into the more particulars. We're going to go through each category.
I mean, I think that you said it correctly when, everybody, you talk in construction about cash flow to anybody, everybody's going to understand that piece of it, but I think it's the underlying, the components that aren't being addressed all together for a solution. There's individual, pieces that are fixes, but there's not a solution unless everything is brought together, the monitoring, the risk mitigation, certainly the allocation of funds. So I think those things all play a key part in that cash flow that everybody's so well aware about. So
right, agreed. Agreed. So look, on the cash flow side, we have some of the obvious things. We've got 60 days to get paid. We've got this sort of infamous paid when paid, or even paid if paid component that's exists in most contracts between subcontractors and general contractors. And the challenge here is there are plenty of funding solutions, but unfortunately, the reason we have this big issue is because most of them are not a good fit, right? I mean, there's plenty of money out there, and banks and investors or what have you. Everybody's looking for a return on their capital. So if there was a solution out there that was sort of a ready fit, I think it would already be addressed. We can go through a couple of them. We've got banks. The problem with banks is that they're typically going to look at the past, right? So if a subcontractor is doing, $1 million a year and has the opportunity to do $2 or $3 million, a bank is typically going to lend on what that company has done in the past. And of course, your personal credit and collateral and assets, of course, play a big role in typical bank loans as well. There's some other avenues. You can borrow from friends and family, or fund your growth on your credit cards, or even take an MCA loan. But none of these things are really sustainable. And I think that's been the problem in the industry, right? you've got this long payment cycle, 60 days plus or minus. You've got a large percentage of subs, as you can see up on the screen now, that are not being paid in full. Almost over half of subs are claim in recent surveys to not have been paid in full on recently completed projects. And it's really limiting their opportunity to grow, right? If there was a capital solution out there that would allow particularly subcontractors to take on more projects, it would certainly help them grow and help them be more successful. So we believe the cash flow issue is limiting their opportunities, and in addition, in creating a lot of additional risk for all the parties really involved, right? A typical sub that's maybe doing $1 million a year in sales, let's just say they're billing $100,000 a month, and they have to have enough capital to carry about 90 days worth, right? So if they're a typical sort of 20% gross margins, maybe 5 or 6% net margins, they've got to carry roughly 90 days. So they're going to have a couple of $100,000 in working capital to just be able to sort of sustain that, right? To carry the month they're in, then they submit the billing, and then they've got to, carry the next couple of months while they're waiting to be paid. Some things may mitigate that a little bit. They may have credit lines with their suppliers and what have you. But in essence, they're going to need a couple $100,000 in working capital. And if they're sort of growing very moderately, or they're sort of at a plateau and it's taking them some time to get there, that may be sustainable. But the minute they have an opportunity to maybe do 2 million in sales or 3 million in sales or take on more projects, their cash flow problems are going to increase exponentially. And so the cash flow limitations really limit their growth and create a lot of risk for the project and all the players involved. I don't know if you have anything to add to that, Scott.
Yeah, I was going to say, I think that is a huge misconception, and most of the GCs that I speak to nowadays are, if we have a client that's in our program, they think, oh, if they've got cash flow problems, then they're financially not sound, or they've got other issues. And it's quite the opposite. It's the guys that have more work than they know what to do with. It's the guy, like you just said, they maybe built up a little capital to get them 90 days or whatever, but now they've got an opportunity to do three new projects, and they all start within the next month. Those are the cash flow issues that we're solving, the guys with the opportunity to grow and take on more work. So I think that's a big misconception of the cash flow issue.
Right. No, absolutely. Yeah, it affects everybody from the supplier all the way up to the owner, the banks. I mean, everybody's concerned, right? The banks and the owners, they want the unconditional waivers every month, but of course the sub can't pay the supplier typically until they've been paid. So then there's this sort of, game of cat and mouse, and everybody in the meantime is trying to protect themselves and understandably mitigate their risk. And it just, it causes problems. It causes delays. It causes uncertainty. I can't tell you how much time I spend speaking to our client suppliers, explaining our program. And of course, once they understand it, they feel a lot more comfortable funding the project. So the next issue is the allocation of funds, right? We believe that this is the next key issue that has to be addressed in order to have a successful solution. So, allocation of funds, also known as funds control, obviously that's really the key, right? Regardless of where you are on the chain, if you're the owner or you're a supplier or anybody in between, everybody wants to make sure that they're going to get paid, right? And everybody wants waivers from the people below them, right? So to the owner, everybody's below them, right? To the general contractor, essentially everybody's below them. And of course, each sub has their respective second-tier subs or suppliers. And so, making sure payroll's made, if it's a prevailing wage situation or certified payroll or what have you, obviously it's even more important that everybody is paid timely you know, waivers have to be collected, and of course, you know, if can't do that unless everybody's being paid. You've got union dues, and you know, a number of other expenses that can encumber the project if they're not paid, right? So we believe that part of the solution has to be a solution that addresses, you know, clearing the job of all liabilities, right? Anything that can come back and basically encumber the project and therefore become a problem to, you know, the general contractor above you or the owner or the lender, and therefore disrupt the flow of payments, right? There's a lot of sort of robbing from Peter to pay Paul that goes on in this business, and you know, it's almost this necessary evil, right? I mean, you know, a number of states, I think it's 19 or 20 states, actually have trust fund laws that really put very strict, you know, strict restrictions and penalties on robbing from Peter to pay Paul. But I've yet to meet a subcontractor that has not been, you know, at least at one point or another, sort of forced into that situation, right? Because you know, they have to keep these jobs moving, or they're also at risk, right? I mean, they have schedules to keep, and of course, if they get behind, that also puts their payments at risk, right? So we believe that another key component to project success is the allocation of funds and also transparency, right? So making sure that the supplier knows who the owner is, and that the owner knows who, well, certainly they would know who the subs are, but they might not know who the second tier subs are. So we believe that bringing transparency to the job and making sure that all the funds, sort of being that third party that makes sure that everybody gets paid, is another key component to solving this problem. Scott, you have anything to add?
Yeah, the transparency, I think, is huge, and I think that's, you know, we'll probably mention that already in the intro. We mention it every step of the way. The transparency on a project, you know, it's amazing how complex a construction project really is, you know, and how one level doesn't understand the next level. It's really surprising that, you know, sometimes even the general contractor has no idea who the suppliers are, who the second tier subs are on their project. And every single person on that project poses a risk in one way or another. So the allocation of funds, the funds control approach that's taken, again, as part of that overall solution, is huge, I think, to take that risk away from the project, from the bank, the lender, the owner, the surety, all the way down to the supplier.
Yeah, and that uncertainty causes delays in itself, right? You know, I mean, if an owner or a general contractor knows or has a high degree of comfort that the parties beneath their subs, or anybody who has the right to encumber the project, and put their relationship or their payment from their owner at risk, if they have a high degree of comfort that those funds have all made it to the right hands, things are going to flow probably a lot faster. Our findings have been, we ran a survey a couple of years ago as an informal. We did it with, I think it was 10 or 12 clients, but we found that they were being paid on average 7 days faster, something along those lines. So, you know, getting those unconditional waivers to the owner, or giving them the comfort that everybody's being paid, that the funds are getting to the right place, is definitely a key. You know, it greases the wheels and it keeps these projects on schedule. So the next component that we feel is a key factor in this is monitoring, right? You know, as the slide says, monitoring is almost always overlooked until there's an issue, right? And that's another thing that we believe is key, right? We believe it's key that the licenses, insurance, you know, taxes, certainly payroll taxes, are being monitored, right? We believe that, you know, the project's margins as well. It's important that when we have a client on board, you know, we want to monitor their license, their insurance, their workers' comp, we make sure their 940s, 941s are being filed and paid. But we also monitor the project's margins for them, right? Now, obviously, we're doing this for ourselves, but we don't want our sub to, or our client, or really anybody that we're working with on the project to, as I like to say, sort of run out of runway, right? When that plane lands, you want to make sure there's enough runway, for it to come to a full stop, right? So we monitor the project's margins because if, God forbid, there is a shortage, or, we think knowing about it as soon as possible is key. Maybe there's some change order that wasn't submitted that really should have been. Look, sometimes our clients, misbid a job, they low bid it, but often there's some sort of extra work or something that was done. And by tracking the project's margins, it will immediately highlight any issue. If, we track each line item, right? So if a client of ours, typically the first tier sub, is losing money on a particular line item, we're going to highlight that for them right away. Worst case, it educates them for the next project, right? They don't make that mistake again for whatever reason. They're using old pricing or what have you. Or best case, it highlights the fact that, there was a delay. Here's why. It was the owner's fault, or the GC's fault, or this other sub's fault. And you know what? I'm entitled to a change order. And so we think tracking the project's margins is very important. Also, just monitoring the overall compliance requirements of the project, right? So again, if it's a prevailing wage or certified payroll, we want to make sure that our clients are getting that in on time to the general contractor, the owner, the lender, or what have you, because again, these are key to getting paid quickly, right? I can't tell you how many times over the years we've had clients have come to us and their payments were held up 2, 3, 4 weeks because they didn't fill out the proper or didn't submit certified payroll or God forbid let their insurance lapse or something like that. So we think monitoring is a key component to making sure that payments get to the right place quickly.
Yeah, and I'll add too, Frank, I think that monitoring not only, again, transparency from everybody on the project, the benefit that the GC or the owner, so to speak, gets from that monitoring, knowing that anything contractual that they require in order to issue payment is being tracked and taken care of. We're on top of that. Likewise, that takes a lot of the back office work off of our client, when we're on top of their licenses, insurance, making sure that they're up to date, help with certified payroll, everything that's required for them to submit to get that payment. So again, that monitoring is really a benefit to everybody.
Right. Yeah, agreed. I mean, I can't tell you how many clients, occasionally we have a client say to us, what's all this babysitting about, but inevitably if they overlook, renewing their, they're filing their annual report with the Secretary of State or renewing a license or their insurance is coming close to lapsing, or they've forgotten to submit something that the general contractor, the owner requires, inevitably, they're grateful. And so, it really protects everybody involved. But the key here is it greases the wheels, right? Everything that we do, what we did was when we started putting this program together almost 12 years ago, we looked at sort of everything that was really causing problems on these projects, right? So again, cash flow, allocation of funds, they're pretty obvious. The monitoring, less obvious, but really, and the final topic is we believe is risk mitigation, right? I mean, that's everybody's goal. No matter where you are on the project, right? If you're a supplier, you want to make sure you're going to get paid. If you're an owner, you want to make sure that the suppliers are being paid. everybody's really trying to cover their butt, right? So we believe that when packaged up, the key here is mitigating risk, right? So if we have a subcontractor in our program, when we fund that project, we get a commitment from the general contractor that these funds for this particular project are due and owing, right? So that sub now doesn't have to worry about the risk of some offset on that pay application later in the process. Likewise, when the owner or the general contractor are going to release payment, they don't have to worry if the suppliers or vendors underneath our subcontractor client are paid, because we employ a very strict funds control program. So it's really removing everybody's liability. The suppliers know they're going to get paid. The subs have use of their funds almost right away. And again, the general contractor and the owner know that the right people are being paid. Look, this avoids delays, right? You know, it's one of the biggest, you know, in my experience anyway, over 30 years in commercial construction and finance is, you know, the delays are usually not what they appear to be at first glance, right? That sub that says he's having a problem, the material's back ordered. Maybe it's really not back ordered. Maybe he's waiting for a payment from another job to pay that supplier so the supplier can get that material on the job, right? You know, staffing or labor problem. Again, that's the cause of a lot of delays and sort of puts tension on these relationships. But often it's because that subcontractor is having trouble making payroll because that GC and that owner are taking 60 days to pay them, and they've taken on some bigger projects and they're being stretched thinner and thinner. So, you know, we believe again that these four things, when packaged together, and it's what we do obviously, are a you know, are a key component to reducing the risk dramatically for all parties involved. And, you know, we think that's the key to project success. You know, our clients, you know, well, coming into this, the crisis or the COVID crisis and what have you, everybody that we were working with had an opportunity to do at least 50, if not 100% more work than they had done the prior year. So, you know, if you can make your general contractor or owner comfortable, they're going to give you more work. And that's another issue that we believe, you know, we solve, right? So by making the people comfortable that cash flow is simply not going to be an issue, right? Funds getting into the right places, the right people's hands is not going to be an issue. Monitoring the things that could inadvertently become a liability of the owner or the general contractor, such as a license expiring or insurance expiring or what have you, is no longer an issue. It's being monitored. And when you put that all together and you look at all the risk that's eliminated from this, you know, we believe that this is the solution that can, you know, help these projects be more successful.
Yeah,
Scott,
Frank,
I don't know if you have anything to add.
not only, you know, from the GC, obvious risk mitigation that they're provided by making sure everybody's paid, waivers are collected, everything's done, payroll's being made, but, you know, especially as you mentioned with the COVID going on, I've been having a lot of conversations the last few weeks with, you know, as projects start to open up again and get going again and get turned on, some of the suppliers, a lot of the suppliers that we work with, or clients work with, they said you wouldn't believe the requests for quotes that they're getting for materials for these projects. And so the supply chain is going to be tight getting material. And, you know, they come right out and say, you know, who do you think is going to get in first in line in the material? Someone that's giving me a joint check from a client you guys are working with, or someone that's asking for more credit I never heard of. So, you know, even the risk that you wouldn't traditionally think of the suppliers giving these guys more credit, they're much more comfortable when they're getting a joint check from us and making sure they're getting paid timely. So risk for them as well.
No, that's a great point. Yeah, I mean, again, just greases the wheels. That's the thought that always sort of comes to mind, right? It just, everybody feels more comfortable, right? The supplier can now rely on a third party, knowing that they're going to be paid. And not only the insurance that we provide, so to speak, but also the fact that they're going to be paid promptly, right? So now not only is there a third party making sure they get paid, not only are waivers being collected every month, but they're also being paid promptly. When that general contractor or owner has to release payment now, they don't have to rely on the prior period, right? The prior period's bills being paid. They now know that if it's, July 2nd or 3rd, and their sub is just billed for June, they know by the 11th, 12th, 15th of July that all of the liabilities associated with June have been paid, waivers have been collected, and what have you. So we believe that this is the key, the four components put together.
Guys, before we move on, I actually wanted to pose a question that we got from the audience. And the question is there language that a subcontractor should try to include in the contract before the project starts to help mitigate the subcontractor's risk, and a language that the GC will accept as well?
Right. So one of the things that we recommend that our clients, which again are typically the first tier subcontractors, add into the language in their contract is we give them I think it's a 2-sentence paragraph that we suggest that they either, if it's their contract, they would put that in their contract, or if they're submitting a proposal or a bid, they would include that in the bid language to make sure that their general contractor is aware that they work with a funds control, risk mitigation monitoring company up front. And if there's any questions or concerns, what that does is it gets that out of the way at the very beginning, right? So, that from our standpoint, that's the best way to put it. We believe obviously in our own solution, of course, but obviously you can, some people are pushing for faster payment or, regular payment terms, irrespective of the paid when paid or when the owner pays or what have you. But from our perspective, when our clients come to us and they say, hey, what should we work into this language? How do we make sure that we're going to be able to utilize this program when the time comes? And we always tell them to basically bring this to the table right at the initial, very early on. I can't think of the last time that a subcontractor client has asked us to speak to the general contractor. General contractor says, okay, you're a low bid, or, we want to award you the job. Explain to us this cash management company that you refer to in your proposal. We don't understand this. If that happens, we ask the client to arrange a call. And I honestly can't think of the last time that a general contractor didn't, get off the 10 or 15-minute phone call with me or Scott and say, wow, this is great. I just got a whole lot more comfortable now knowing that when I am about to release payment for a certain period, all of the liabilities associated with that period have been paid, right? So that's what we recommend.
Yeah, I was going to add to that, Frank, too. We definitely have language that we have our clients put in their RPs or proposals, and their contracts. If we have a client that's already started a job, I was just going to say, I think we're batting 1,000 when it comes to hopping on the phone with their customer, with the GC, and explaining the program. And actually, I can't think of the last time we've got any pushback at all, to be honest with you. So.
Sure. And I know you guys are going to jump into the application process here in a second of how, if people are interested in these tools, how they can get into that and how to contact you guys. One question, you guys provide a lot of solutions for helping contractors navigate through these complex problems. How much does that cost? How much does that cost to a subcontractor? How does that work? Because you do provide a lot of help and resource to help people navigate these problems.
Right. So typically it depends on a few factors: the size of the client, size of the project, and there's a couple of factors. But typically, it's going to run about 4% of the project, right? So the way it works is we advance, when our clients bill every month, we advance 80% of those funds. Typically, those funds are going to go to payroll and sub-suppliers and vendors and what have you. When the general contractor ultimately pays, we release the balance of the 20%. But depending on our client's mix of suppliers and material people, so in other words, if they have 60% of the job, let's say, is materials or supplies, most of our clients are able to get an early pay discount from their suppliers, right? I speak to reps on a regular basis, explaining to them that, look, you're going to be paid promptly. We're on this project. There's a lot less risk. So most of our clients are able to get at least 2%. Occasionally they can get 3%, but that offsets our fees. So typically, I think on average, it costs our clients about 2.5% of the value of the project for us to provide our services and finance the whole project. I mean, the client, really can essentially do the whole project now without coming out of pocket for the most part. And again, so top line costs about 4%. And on average, it costs about 2.5% is the net cost. Again, if you're a labor-only subcontractor, obviously there's not going to be a lot of room for you to offset it. So you may sort of get stuck with the full 4%. But generally, when there's suppliers or other vendors involved, particularly if they have second-tier subcontractors, if our client's the first tier and there are second-tier subcontractors, they're usually able to get a 5% early pay discount from them. There's most second-tier subs will readily give a 5% discount to be paid in 2 or 3 days versus 2 or 3 months.
Sure. That's great. And, I think the thing to underscore there is you're providing so much value that to get it at a net discount on top of all that you provide is a really good deal. We have a few additional questions. One, an attendee here says, I work for a subcontractor and we recently just started asking how our clients expect to pay once the job is completed. And for the most part, we've been getting the answer of check or credit card once the job is complete. Do you think it would be beneficial for us to be asking about funds control, or is that the contractor's responsibility to disclose?
So I'm a little confused by the question of who the parties are. So is the question being asked by a first-tier subcontractor that's working for a general contractor?
Yes.
Okay. All right. So I'm not really following what the issue was. Can you read that back again, Michael?
Sure. And I'm gonna ask another question, and then I'm gonna message the attendee to see if they can clarify or if I can read it through and see if I can make it more clear. So I'll maybe give you an easier question right now. So in regards to the fee for FK Construction Services, can you pay by contract, or do you need to use you guys for all of your projects?
Right, so that's a great question. No, our clients pick and choose the projects that they want to finance. So if our client has 10 projects throughout the course of the year and they want to finance 2 or 3 of them, we encourage that. We would rather clients use us strategically, simply because we found that if it works for them on a long-term basis, they remain clients for a long time, right? So yeah, they get to pick and choose. And I work very closely. I'm an ex-GC, so I Scott's also worked in construction for coming on 20 years as a project manager, project controls. So we really try to make sure that we work with the client, and we'll sort of look at all their jobs and, okay, this GC is a slow payer. Maybe we should finance this project, or this guy's a quick payer. Maybe we should do this one, or there's a lot of material on this job, no material on this job. So we try to definitely make this work. I mean, at this point in my career and our company's we want sustainable solutions, right? We want things that work for both parties. We want to grease the wheels for our clients, the people on the project, but also for ourselves, and keep things, where they work for the client. So yeah, they get to pick and choose.
I think that's huge, Frank. I mean, that's really important. I think that our program isn't for everybody. Certainly, we're here for the ones that are. We're not. We're very methodical in the approach, the project approach, and a lot of the clients, exactly like you said, it doesn't make sense for them to put every project in our program. If they've got a GC they've worked for 10 years, they know they're a 30-day payer right on the day. They don't need to put that in there, but they've had an opportunity to work for get a larger job and they've never worked with them, or that GC's had a reputation of slower payment. If they can use this, then great. We're very conscious of that.
Yeah, another thing we do is, when we're involved in these projects, we really sort of eliminate any reason that the general contractor, the owner, would not pay, right? So in other words, the main thing is obviously allocating the funds, right? We clear the decks, as we like to say internally. We pay all the project's liabilities each month, right? And of course, we use Levelset for the notice to owners, or the collecting the waivers and what have you. And by monitoring everything, the licenses are intact, insurance is active, yada yada. We really eliminate any reason that the general contractor would have not to pay. Now, obviously, we want to protect ourselves. We're advancing the money. We want to make sure that money is ultimately going to come back. But in the course of protecting ourselves, we really have to protect our client and the general contractor and the suppliers, for that matter, right? Our role is to really protect everybody. And that includes making sure that our services are a good fit, right? There are instances where, someone comes to us and they have a milestone type project. Hey, we get paid as soon as we hit each milestone. There's really no funding payment delay. Once we hit that milestone, we'll tell our client maybe that they shouldn't use us on this, they should use us somewhere else. So yeah, they get to pick and choose.
Sure. And another question, what limitations do you have in regards to an ideal customer? Are there any cutoffs or any necessary revenue sizes or company sizes or companies that you won't work with? What are some of those limitations if someone were to apply?
All right, great question. So our typical client is, as I said a few times so far, is the first tier subcontractor. Not always, sometimes the second tier. We have some second tier subs on the NFL stadium in California, for instance, on bigger projects like that. But typically it's the first tier sub. They're typically doing 2 to 20, 25 million in annual sales. Sort of our real sweet spot is clients doing 4, 5, 6 million that have an opportunity to grow to 15, 20, 25 million. So we certainly take on clients smaller from time to time, but we're sort of looking for that client that's doing a couple of million in sales. Again, so 2 to 20 million is our sweet spot as far as client size.
Great. We have, I guess, if we have time for, one more question, and our attendee asked the first question that kind of confused us a little bit, gave a little bit of clarity, and please, if we don't answer this appropriately, you can email us directly at the contact information listed here. But what I think they're asking is, you had mentioned the value of transparency when it comes to using funds control as your payment mechanism. As the subcontractor or someone receiving payment through funds control, what's the appropriate response for the person receiving funds control as payment in regards to transparency? How should the person receiving that ask the proper questions to have appropriate transparency to understand how your process works as the method of payment?
Okay, so
Apparently I got that right. So they're trying to understand if they're being paid through funds control, like if their customer is using FK Construction, what types of questions should they be asking at the outset so they can manage expectations?
okay, so if they're the beneficiary of the funds control, right?
Correct.
Let's say our client is the first tier sub, and let's say this is a supplier. I mean, what we do with our clients anyway, and what we do is we notify all the suppliers. We send them an intro email the first thing we do is identifies the project owner, the general contractor, the project location, and the dollars that have been allocated to them on that project, right? So if it's a $1 million project and it's our sub is an electrical contractor and this is the electrical supply house, and our contractor estimates that that he's going to spend $120,000 throughout the course of the project, that's what we let them know, right? So the recipient of that is getting all the information about the project that they're about to release materials to, but they also know in advance how much has been allocated to them, right? So they can do one of a couple of things. If that supplier has given that subcontractor a number, right? Maybe it's done a takeoff on plans or whatever the case is. He can, of course, match that up to the bid that he gave them, right? So when we send out that package and we say, hey, $120,000 has been allocated to you on this project, they can match that up with their contract and say, okay, right, that matches. If it's an estimate or if it's just a sort of a budget, what a lot of suppliers will do that we work with is they'll contact us, they'll confirm the dollars, we'll say, yep, this, they've earmarked $120,000 for electrical supplies. What that supplier will do is monitor the amount, basically keep an accounting of the material that's been released to that project. And once they get close to 120, or if they were to exceed it, they would contact us. And then, of course, we would say, oh, you know what, there's a change order, you're fine. There's another $27,000 earmarked to you, right? Or to your supply materials with you. So that's the type of accounting. I mean, it's hard to cover all this in a short presentation,
sure.
but yeah, we start with the schedule of values, the underlying bid. We let the parties know how much has been allocated to them, and again, that really greases the wheels. These suppliers now, I mean, rarely have a problem issuing credit when we're involved, even when they've turned down our client before, or maybe they've told our client that look, you're at your credit limit, we can't increase it. When we explain that, we're allocating money to this project, we're going to be paying you by joint check, we're going to be contacting you every month and securing the waivers and what have you. I can't remember the last time a supplier said no.
Great. Well, we're a little over on time. Frank, Scott, I really want to thank you guys for your time and going through such an extensive topic. I know it was definitely valuable to me, so I hope the attendees found it valuable as well. Attendees, thank you for attending. As a reminder, if you have any follow-up questions for me or for the other panelists, our contact information is here on the screen. And feel free to follow up with us. FK is a great referral partner of ours because they provide a lot of value to construction businesses. So I can't speak highly enough of them. And thanks again for everyone for attending. And hope you have a great day.
Thank you, Michael.
Thank you, Michael.
Thanks, guys.